So good morning, everyone. Welcome once again to our weekly webinar, 30 minutes of fast-paced news, update, education. Welcome officially to Miles and Ed Morgan. How are you guys today?
Good morning, everyone.
Good morning. We're fine, thank you.
Absolutely fantastic. You guys can join us. And of course, you're one of our historic guests. I think you guys were among the first guests that we had way back in March or April last year. So great to have you back on again all this time later. And of course, let me once again introduce our resident co-host, Mr. John Corey. How are you?
Good day. Welcome, everybody. I hope to have a bit of fun today. Let's see what we cover.
Absolutely. So as any new guests happen to be on today, my name is David Johnson. I'm the CEO of an equity property crowdfunding platform called Leo Crowdfunding. And John runs the Property Fortress, which, John, you want to just take 15 seconds and explain what Property Fortress is?
Yeah, so I mean, in the background a little, there's this idea, there's 4 pillars: community, apps and tools for doing deal evaluation, real estate investing together, which is one way of saying crowdfunding, and education when it comes to what to look out for and what to do. And these sessions and others like this, plus my monthly meeting and training things that I host, are all about trying to raise your game so that way you can do smarter deals. And there's 2 sides to that. One is people like Ed and Morgan and the team there. They're all about bringing deals to the table, and they know what they're doing. And particularly the older gentleman in the room, older than me, finally, he's got like 30 plus years of experience of doing this. And the people that are more like me, angel investors, whatever, that's like, look, I don't want to do the heavy work, might ruin my fingers, my nails or something. So how do we get those 2 to talk to each other, and how do we facilitate a deal? And that's when we go to David's platform.
Yep, absolutely. So we discussed last week when we had our Christmas break, summer break, almost a Christmas already, John. It's hard to believe.
Yeah, I was going to say, what is this? You're doing Christmas already? It's only September.
I've seen the text fly about how many days. It was 100 days to Christmas there last week. After our summer break, we've revamped this a little bit and focusing in on a couple of key benefits we think are there for the attendees. Now, one of these is Ask John section. John's obviously on these every week, wealth of knowledge. He's absolutely delighted today that he's not actually the oldest in the room, and we're going to be hearing the words of wisdom from Miles just in a minute. But first of all, John, this Ask John section.
Actually, I'm not sure that Miles is actually older, but we're not going to go there.
I don't feel old, so.
Yeah, either do I, Miles, but I'm not sure whether you or I get the trophy.
Great answer. Great answer, Miles.
I was driving a truck yesterday, taking muck.
The way
a big hole. So.
Yeah, well, it's gonna be interesting to hear some of the experiences. Certainly, just a minute. So, in these Ask John segments, people are sending us in questions. John, for this week, a person has asked, how should they deal with some of the key challenges they're finding? Lack of time, finding deals, their knowledge gaps, and just overall confidence. So how would you give some words of wisdom to this question?
I think a little bit is like riding a bicycle when it comes to lack of knowledge and confidence, that it's something that you just have to do more of. And then when it comes to finding deals and lack of time, well, let's be realistic. If you don't have the time, you don't have the time. So don't make the process something that depends on that. This is where I tell people, if you're getting started or if you're really quite busy, you're going to have to invest in other people's deals. You're going to have to be the money in the room, because if you say you have money, people will bring you deals. Doesn't mean they're actually good. It means that you don't have to worry about doing all the nitty-gritty hunting around. And look at what they bring you. Do your homework. And if you're not confident, say you're out. If you think there's something there, but you have some concerns, well, limit your exposure. If you can afford to put a small amount in because you want to test it out, you want to figure out what you don't know by actually doing it, fine. Well, that'll work. And over time, you just have to deal with that. Life happens and people have busy schedules. You either have to give something up, or you're going to have to basically be more of a passenger in someone else's deal.
I think I would just add one thing, and that is that all of us, all four of us on this, and everyone who's experienced in property, all started where this person is now. We all had some of these same challenges, lack of knowledge. We all started with no knowledge in property, and we had to learn. We all had to go out and find deals. The confidence thing I find interesting, because I still remember accepting the very first deal I did, and at the point of, do we sign the contract or not, and thinking, just the mind playing tricks on you. If this is such a good deal, why is all the experts in Belfast not already bought this? There must be something wrong with this. And you would check through the details and it checks out, but there was this real lack of confidence in taking the step to make that first buy-to-let purchase, which was like £38,000 in those days, which seems so minuscule now, but I can still remember the emotion of that, and confidence was a big thing. You got to have the confidence to back your judgment sometimes in property.
Yes, well, you won't know how it's going to turn out until you actually do it, and even then, it's not clear that it might have turned out differently with someone else. So yeah, do your homework, understand your downside, be prepared to suffer through that mistake if you did make one, and move on to the next one. So you're not going to change your life in one deal, and you're not, other than maybe ruin your life. So it's a long game. You got to do multiple deals over time. Stuff will happen. As we all know, this is great right now. None of us predicted COVID. Stuff like that is an outlier, that when it happens, you just deal with it. So you got to be confident, and you also have to be confident that you can adjust.
Absolutely. Okay, thank you for those words of wisdom. So if we move on then to the next slide. Property market update. So again, as I said last week, rather than just simply every week giving this big overarching view of the UK, there's so many different areas and factors and things that play into different areas of the market. So this week we are focusing on Bristol. It's an area that's been very much in the news the last couple of months. And it's absolutely brilliant to be able to bring on Ed and Miles Morgan. So again, guys, thank you for joining. Really appreciate it.
You're welcome.
We're happy to be here. Thank you.
No, brilliant. And in terms of experience, Miles, they don't come much more experienced than your good self, particularly in your background and what you've done. So maybe just for the benefit of the attendees, maybe just give a quick overview how you got involved in property and how long have you been involved in property?
I joined the property industry when I was 17, working for a very large house building PLC, Wimpy Construction House Builders, who morphed into Taylor Woodrow, and they're still going now. I was taken on as a management trainee. They sent me to college. I became a chartered builder, which was meant to be managing large construction house building projects. I then left to earn more money, and I was working for the Ministry of Defence, looking after Ministry of Defence establishments. And then the entrepreneurial part of me wanted to earn a lot of money, basically, to bring up my family. So I went into business, of all things, selling oil paintings. I was only early 20s. I was importing oil paintings from Hong Kong, but that was a means to an end. Anyway, after 2 or 3 years, I'd earned enough money to buy a property at an auction. I overpaid at the auction, like everybody does when they first start. But nonetheless, I did renovate it and I did sell it. And I made, at the time, what I thought was a lot of money. It was almost equal to my salary at the time. So I kept on doing that for 2 or 3 years until I established a business. It was large enough for me to pack in the day job, so to speak. So I then went, this is about 1988.
Yeah, you've ended up, that's without trying to work out your age, certainly you're probably heading towards 40 years in this industry, which is absolutely brilliant. And Ed, you're obviously the next generation. And so what took you into property?
Didn't have much
Or had you any choice?
He did.
So I suppose, well, I grew up around it. We've always been actively involved and interested in what was going on around us, which was basically lots of property being built, a lot of property being sold, investments being made, having to just
built our free homes we live in, haven't we?
it was always a strong theme in our life, really. So I grew up around it. I was interested in it, and when it came to leaving school, I thought I fancy having a go at this. And 12 years later, I'm still here. I'm running my own projects now, and hopefully you'll see me in another 30 years sat in that seat.
And I'm still going to be here as well, I can assure you.
Well, that would actually would be a phenomenal webinar if there's 3 generations of builders from the Morgan family. So you were saying there, Ed, obviously Beaumont Homes, there's the Morgan crest. That's been the main brand, Miles, that you've had. Just more recently, really post-COVID, you've started to do some stuff on your own primarily. You've obviously still got the brand behind you in West Country Partnerships, Ed. And we'll come on to that just a minute. So let's get into Bristol. Just some of the high level stuff on Bristol. Obviously, it's the most populous city in the southwest. It's got a lot of economic benefits. There's a lot of creative media, electronics, aerospace industries, which all very much impact the property market. Quite a large population, and transport links obviously are very, very good in Bristol between train, port, and airport. So what were you always from Bristol, or how did you end up settling in Bristol?
I was born and bred in I was born in a small Somerset village called Keynsham, which is an Anglo-Saxon market town. Basically, it was on the outskirts of Bristol, and then my parents moved into central Bristol, and I lived there.
Keynsham is now very much been absorbed by Bristol. You would consider Keynsham a suburb of Bristol now?
There's a small bit of green belt in between. It's a commuter town. Then I lived there until I got married to Ed's mum. I'm still my wife after 43 years of marriage. Then I went to live in Clevedon, which is a seaside town near to Bristol on the estuary. And then came back to Bristol. And then I've been developing in Bristol continuously since 1984, 83.
Okay. So in terms of the property market then, let's home in now on property. I mean, you've obviously, Miles particularly, have saw a lot of ups and downs over that period of time. So even just this last year and a half or so, how, some with your experience, how have you viewed the whole COVID thing, how it impacted the Bristol market from where the conversations we had in March and April with all the uncertainty to where we are now? What's your take?
I never expected the economy, the market, particularly in Bristol, to take off like it did, like it has done from March, April. I mean, all the way. This is one of the challenges. A year ago, we were forecasting a downturn now, which has led to us not buying any sites because we thought they were going to go down in value. But the complete opposite has happened. So that just goes to show that history is not necessarily a predictor of the future. The situation at the moment is very similar to at least 3 occasions in the past that I've experienced. We've had these buoyancies. We had them in 1988. We had them in 92. We had them in 2000. And we had them in the period leading up to 2007. And in the past, they've always led to a dreadful situation about a year later. Sorry to be a bit of a gremlin here, but that's what I'm forecasting again. But you've got to remember that when people say Bristol, I mean, you've got the city of Bristol around the Docklands, which is a market on its own. You can't say the Bristol market is like central Bristol. It's like saying London is like Mayfair and Kensington. I mean, they have an economy in that central area, which is devoid from economic common sense. It's
that's actually a really good point to make there. And John, just to bring you in on this, I mean, I know you've been saying right from the very first broadcast we did last March that, you know, the market over time goes up and down, up and down, up and down, and don't get too focused on exactly where it is now. And really, you know, here we are a year and a half later, and what you talked about has obviously been very accurate.
Well, one of the things that is sort of different is if I'm a landlord, I'm buying maybe for 10 or 20 years. If I'm a builder developer, I'm looking to acquire a site, build it out and sell it on. And that's in a much more compressed time frame. And particularly when you finish the development and you're trying to sell it on, you're probably trying to sell it on or complete the sales that you might have already lined up in a space of a few months. So short-term impact of the market can have a big effect on a developer, whereas a landlord over 20 years, hey, we had some ups, hey, we had some downs, but I kept collecting the rent. So it's really very different in terms of what the exposure is. So
yeah, here, John. The people who have and are making a lot of money at the moment have done it by fluke and luck. The people who bought sites over a year ago never foresaw that this huge price increase, and good luck to them. They've lucked out. But you can't run a sustainable business over 40 years based on these lucky breaks. You need resilience.
But there's, I think you have to weigh that argument with the host of other issues that they've had to deal with. I mean, there's any increase in the value of the development has potentially been mitigated by the fact that the project has gone on longer than it would have done prior to COVID. Materials have gone up significantly. So you've got to take a rounded view of things.
Price increases, the wages have increased tremendously, which is nice. It's not very nice if you're halfway through a development and you cannot complete it for a contracted price. Materials, I'll give you an example. This is a hard fact. A sheet of plywood, which is used all the time, they come in sizes 2.4 meters by 1.2 meters. They're almost all imported from Scandinavia. Over 12 months ago, they were only £19 a sheet. Well, we're still buying it, and they're now £41 a sheet. £41 a sheet. And not only that, they're not in stock. Sometimes you've got to book them 3 weeks ahead. And as soon as they come in, they go straight back out again. Factories of not, the economy in the UK, well, Bristol is absolutely boiling, right? There's so much work going on down there. Everyone is earning more and more money, and there's not the capacity to deal with it.
The factor of where we are. What would have got on the slide there in terms of, you know, the why invest in Bristol. So from April 2020, according to the statistics, to March 2021, you're looking at a difference of £60,000, you know, average house price. So from 309 up to 370. That's what's happened in this period of uncertainty. Now, just to elaborate, if we finish this slide and move on. You mentioned there, Miles, that the economy in Bristol is boiling, to use your words. What's driving that? You know, is it rental demand? Is it because so many people are working? What is behind that?
Well, the city of Bristol is a very very sharply controlled planning environments, like all well, I'm not sure about the cities in the Midlands, but the cities around here, Bath and Bristol and Cardiff, they're, well, you know, Bath is a World Heritage City. Some parts of Bristol have become very, very popular. It's just been voted one of the top 50 cities in the entire world by Forbes magazine. I mean, it's a pleasant place and there's a lot of work here. It never really does suffer from industrial downturns, because the economy is based on high technology, aerospace, financial services, and a lot of homework out of the very large creative set of industries in central Bristol. It does attract wealthy people from other parts of the country, and they all want to live in central Bristol, Clifton, Cotton, Redlands. The house prices have only increased in certain areas, so please don't assume that the whole of Bristol has had this price increase. It hasn't. I mean, there are suburbs 2 or 3 miles out of Bristol, which are still very pleasant, good transport links, which is where we base our business, because Bristol is so, it's almost impossible to buy a site that makes economic sense. People are buying the sites in central Bristol that will only work after 5 years of price increases, but there's so much money being parked in these sites. I'll give you an example. We deal with someone who was trying to buy a property at an auction, which is bad news. Don't buy an auction in Bristol at the moment. It went for £200,000 more than the, not the guide price. The guide price was about 400, but it went for 750,000. You know, it's just ridiculous. But the people are buying them with cash. You know, in this development, like John said, it's a short-term business. To be resilient in the development business, you need a lot of equity, a lot of cash. You can solve all problems with cash. It doesn't mean to say you'll make any profit. We're making a profit, and to do that, we're buying in the suburbs with the good road links into the centre.
Yeah. Okay. No, that's a really good point to pivot on to the next slide. So thank you for that. Really good insight into what's actually happening in Bristol. So as people hear the headline about the housing market in Bristol, you know, you've been able to shed some really good light, if you like, on what's behind the story. Really beneficial. So thank you for that. You talked about the suburbs, and Ed, we've obviously gone view deal on your next project with us. And you've obviously got one that is almost coming to fruition. We'll talk about it in a minute. And yeah, this one, do you want to just run through the key points of the Bridge Road Bristol project?
Yeah, of course. So all of these opportunities take months and months of work. This came to my attention probably 4 or 5 months ago now, whilst I was actually on site in Bitton doing my Avon Valley apartment project, and a person had seen one of my signs, and they came in and they told me about it, and I ended up scoping it out, and I decided that it could be a good bread and butter project, which was fairly resilient to changes in the economy. I mean, we're always cautious about the market. So for the last year or so, I've only really been considering opportunities which have more than one exit route, a strong rental long-term exit route is primary in my thoughts. That's those sort of projects which you can mortgage and you can rent are as resilient as they come. You can't get any more safe than that. So that's what I've been looking for. This one came up in an area which is close to where I live, close to where we conduct most of our business, and local knowledge made me decide that it was worth pursuing.
And it's a refurb of an existing building, and then building in a new build beside it. So for like a purchase of one property, you're actually going to end up with two properties.
That's right. Yeah, it's a tried and tested approach in Bristol. I mean, that's we've got a lot of experience of doing that sort of thing. It's the sort of work I enjoy. It's basically fairly easy to us. See, we are full-time builders. We run construction companies. We do this work for other people. We do this work for ourselves. This is a bread and butter project.
Suits the equity raising model, because there's a number of exit routes. We don't have, well, Edward doesn't have to sell this property to return the money to the investors.
Yeah, that's a good point that Miles to make. So this project is now view deal in the platform. It will go live for investment next Tuesday, the 28th at noon, and you can obviously go on to the homepage on the Leo crowdfunding platform site. When you click on the thumbnail, you can of course have an overview, the financials, have a look at the team. There's also the forum there, but of course you can ask questions, and Ed and the team will reply, and you can discuss this project. Of course, you can download the equity offer document, which will give you all the main information. Now, it is important that if you have an interest in this project, that you register your interest. Again, we only put it up there, I think it was on yesterday morning, and there's already been a significant amount of registered interest as people leaving their email address and an amount that they may be interested in investing once they've completed their due diligence and if they're happy to proceed. So it's always important to have that sort of knowledge of who's interested in investing in the project. Now, we're running a project webinar next Monday night. That's going to be 7 p.m. So that's the night before we go live. An opportunity for people to log in. It's about 45 minutes. Ed and Miles will be back on again, and we'll be able to deep dive into the Bridge Road project, ask questions. Attendees can put their questions to Ed and Miles, and they get answered. And it's a really good way of just getting completing your DD before making a final decision. So that's next Monday night, 27th of September, 7 p.m. There's the bit.ly link. You can screen grab it there or write it down, and you can go on and register for that. So from there, tomorrow is actually site visits happening. So Tony Allner, our Chief Operating Officer, and Dal Ray, who is our Investment Portfolio Manager, they're both going to be on site with Ed and Miles, first of all in Avon Valley at 1 p.m, which is a project that's almost complete. And then they're going to move on to Bridge Road, Kingswood at 2 p.m. And there's also a further project that we're preparing for Ed, which is a planning uplift gain over in Church Road in Winterbourne. So all within a tight area. If anyone wants to go on these, there's still time to register. You can see the email there, tony@leocrowdfunding.com, tony@leocrowdfunding.com. Reach out to Tony, but you do have to book in by close of play today. We can't just have people obviously turn up sort of unbooked, particularly with this COVID environment. We have to keep a check on who's coming and numbers, etc. So great opportunity to meet Ed and Miles tomorrow. Great opportunity to look at Avon Valley if you're an investor there or just want to see the quality of their work. And then an opportunity to visit both Bridge Road and Church Road. So anyone can make that, then I'm definitely encouraged to do that as part of your DD. We're looking forward to being on site, and it's going to be very, very interesting. So Ed, just before we move off that, and we're going to wrap up here in a minute, Avon Valley, no doubt we've got some investors are on. How is it going, and what's your anticipated payback date on this?
Yeah, well, this site is is pretty much finished. It's that scrum at the end. I've got about 5 or 6 vans parked in a car park designed for free cars, all beavering away. There's a lot going on at the moment, but property looks fantastic, and we're almost there. We're still looking to practically complete in the early part of October, and then it's a case of following up with a commercial mortgage after that point, which is all in line. It's all
the figures have worked very, very well.
Yeah, so it's basically it's gone to plan. Yeah, it's been a good project. I'm looking forward to finishing it, wrapping it up.
Excellent.
Looks very nice. Look forward to showing you around tomorrow.
Yeah, no, it'll be definitely good to get on site. So again, not sort of tying you down to a date, but you're anticipating, hoping to pay back potentially, towards the end of October, if all goes well. We'll see how that pans out, but that will certainly be a good development for us. So just to wrap up then, the Citygate House Leicester project, obviously we successfully funded those who are in that. The funds have all been drawn down and gone to VJ. Last week, the start of this week, I don't remember. I think it was the end of last week, last Friday. So VJ is now getting on with the project. We are going to do a behind the curtain tranche 2. So we're not going to be going out and doing sort of public webinars, things like that. But there are some people who didn't get in time on this one who have expressed an interest in investing. So if you do have an interest in this, you can reach out to Dal. And we will be doing just a behind the curtain. We'll probably send out one message to the investor base about that, and then we'll finish off tranche 2. And obviously there'll be investor updates on Citygate and all the other projects coming in the next week or so. Obviously, if anyone wants to talk to John or myself, you can do that. There's all our details. Happy to have conversations with you about consultancy or help you any way we can on your property journey. And with that, we are finished for today. So, John, any last minute comments or observations? I think that's been a really good one today, very valuable.
Well, I think one of the things that Ed and Miles represent is that you have to adapt. And the COVID period brought a lot of things up that no one expected. They had to scramble when it comes to how do you keep workers from apart from each other so you can continue working. How do you get materials? Maybe I remember Ed saying he had to drive around, pick stuff up that he wasn't anticipating, but you do what you have to do and you make the numbers work. And as a passive investor, that's what we're always looking for, is people who are willing to roll the sleeves up and keep the project rolling along. So as a passive investor, if you spread your risk across different operators that know what they're doing, then you play the long game and things can go okay, even in these COVID times.
Yeah,
long
absolutely.
game, that's what it's all about, long game. Here.
Yeah, no, I like that. It's a good note to end that, the long game. It's not surprising, Ed, that the 2 oldest men in the room talk about the long game. Sure, it's not. maybe a few years from now, Ed, we'll talk about the long game as well, will we?
They've got time on their side. Yeah, they've
seen it.
They've seen it. They've certainly seen the long game.
If you think about it, you're the long game Ed had to play, because how old are you without telling us? So that you were a project for a number of years, I'm sure.
Yeah.
Yeah, that's a good point. Yeah, all of them have been part of my long game. Yeah.
I think Ed, I better get this webinar stopped before we're on the wrong side here of another lesson, another education lesson from our elders. Right. All the best, everyone. Hope you enjoyed today. Absolutely fantastic. Big news to get in mind. All the best, everyone. Bye bye.